An accountant, Roger Lee. He actually has served on CBAA before. So we welcome Roger to give us a presentation.
All right, thank you guys for taking your precious time to come here this Saturday. I have a handout. I don't think I prepared enough. We only have 15 minutes, so we cannot cover a lot of details. But we have the Q&A section. If you have any questions you want to ask me, definitely will stay here after my topic, and we can discuss further. I did not coordinate with Guanming for this seminar, so some of the topics will be overlapping, but for me, I will cover more on the tax side, and also I will try to concentrate on the issues in my practice when clients just start business. When they come to me, what kind of concern, what kind of issue they have in mind in terms of business entity selection. I think Guanming cover more on the legal side. That's why this topic is so important, because when we talk about doing business, I think as attorney, when we think about, oh gosh, we need to talk about the business selection. As a CPA, I would think about, gosh, the first people come to me always ask me, hey, what should I start with? What kind of form of business structure should I have? So today, I will take this chance to talk about that. I think in the US, we all know we have, I think most common we have sole proprietorship, have corporation, we have partnership. That's three most common business structure. Guanming said, okay, never start business with a sole proprietorship. But in the reality, that's the most common form of business in the United States. The reason that is, it's very easy to start business, because you don't need to think about other legal side. You say, hey, I just want to start my business. I go to get a business license for my county or for my local city, and maybe some city require you to register the trade name. You can start it. It's very easy, and there's a very minimum cost associated with that. You don't need to have to deal with attorney. You don't have to deal with CPA. So from an administrative standpoint,
Don't do it.
from this standpoint, that's very easy. But when you talk to a CPA, when you talk to an attorney, like Guanming said, don't do it, because when you start business as a sole proprietorship, you are the business is you. So your asset tied into your business. If you have any liability, debt, so your personal asset tied into that, it's very hard to get out of that. I mean, if the business is bad and you said, okay, I want to get out, if there's any debt that's tied into your personally, like your house and everything. So as a CPA, as attorney, we don't suggest you do that, but the reason for that I don't talk about is it's very easy, it's kind of inexpensive, but don't do that. Okay, another form of business, we talk about corporation, okay? When we talk about corporation, and before, I think, before the LLC, I think corporation, everybody wants to get, in order to share the liability from your personal asset, everybody form a corporation. And then we have C Corp, S Corp. Everybody think, oh, C Corp, S Corp. What that is, what's C Corp, what's S Corp? Legal-wise, corporation is a corporation. There's no such thing as C Corp, S Corp. C Corp, S Corp is for tax, it's tax term. Okay, it's tax purpose, you have C Corp, S Corp. Definitely C Corp, the corporation itself is a legal entity, also is a tax entity. When the corporation have income, net income or loss, they pay their own tax. Shareholder, their income will not get to on your shareholder level. And there will be double taxation if you have income, because the corporation will pay tax on that. And then when the shareholder said, okay, I want to get some share of the pie, and definitely the corporation can give you the dividend. And the dividend is after the tax, and then when you get dividend, you get taxed again. So there's a double taxation there. But the entity selection, when you think about C Corp, S Corp, all the kind of business structure available to you, a lot of factors will come to play. You don't think because of double taxation, you will say, okay, because of double taxation, I will try to get away from that. Actually, C Corp does have a lot of benefits. Okay, a lot of things, the benefit-wise, health insurance-wise, C Corp can do. The other form entity, you can do it, but that's taxable to you, like the S Corp, LLC. And also, C Corp, you have the tax rate is graduate. Okay, the C Corp maybe have the lower tax rate at the lower income level, so it might be easier to accumulate capital when you are C Corp because you have 15% tax rate, you have 25% tax rate. If you are S Corp, you are a partnership. Maybe if you already have your income level is already high, maybe you are 28, 37%, and then all the money passes through to you if you're a partnership or S Corp, then you'll be taxed on a higher tax rate. Maybe for the capital accumulation, maybe C Corp is not that bad idea. So just keep that in mind. And then we have the S Corp. S Corp, I think the main purpose we have the S Corp is, I think the Congress think about, when you are a corporation, you start business as a corporation, there's double taxation involved. They think about it, is there any way we can make it simpler? I think in 1986, and then we have the Congress passed law, there's a code section, I think the subchapter S, is talk about a special kind of tax structure for the corporation because it's subchapter S, so that's why we have the S corporation. That when you have S corporation, like I said, it's a tax term, it's not a legal term. So when you have elect a corporation to be S corporation, the income or loss from the corporation will flow to the shareholder level, which means the entity itself will not pay the tax. Okay, only the shareholder. So that's going to eliminate the double taxation, right? But in order to convert, to make the election to be an S corp, so there's some limitation there. Okay, first of all, the corporation cannot have more than 100 shareholders. All the corporation cannot have foreign shareholders, and also, the corporation cannot have corporation as shareholder, cannot have partnership or trust in the shareholder. So if you have foreign investor shareholder in this corporation, and S corp is just not an option. Okay, and third, we talk about partnership. I think now the LLC is very, very popular. Everybody think about LLC. LLC definitely is a very good form of business structure, but the reason for that is because of its flexibility. Okay, LLC can be everything. Okay, if you are a single member LLC for income tax purpose, it's called disregarded entity, which means for tax purpose, it's not existing. I say that again. For tax purpose, it's not existing, which means that you operate as a sole proprietorship. For tax purpose, legal-wise, you still have this LLC, but only if you are a single member. Okay, if you are two member or multiple member, okay, and then you default as a partnership for tax purpose. Of course, if you're LLC, you want to say, okay, how about I'm LLC? I want to be a corporation for tax purpose. Is that okay? Yes, you can do that. Can I be S corp for tax purpose? Yes, you can do that. You can make an election with revenue service. It's a very simple form you fill out. So the LLC default, okay? Single member, disregarded. Multiple member, partnership. And also, if you want to make a election to be a C corp, that's fine. If you make election to be a S corp, that's fine too. That's why it's very, very flexible. People like that. Another flexibility is in terms of profit and loss allocation. Okay. I'm a engineer. I'm in this field for a long time. I find something I want to do, but I don't have money. I have this investor here. He doesn't know anything about the thing I want to do, but he thinks it's a very good opportunity. So we talk about it, and we decide to start a business, and think we're gonna make money off that. He can contribute 100% capital. I just provide my knowledge, everything. And in the operating agreement, you can say, okay, the profit loss can be whatever you want decided. The profit loss allocation does not need to be in proportion to your ownership percentage. That cannot be done with S Corp, cannot be done with the C Corp. That's another flexibility of LLC. Okay? So that's why people like it, because of the flexibility. And also in my practice, a lot of people will come to me, ask me, hey, you know, we have the LLC default, I have a multiple member LLC, can be default as a partnership, right? And then you can be a S Corp. They are all flow through entity, which means if they have income or loss, the income or loss will flow to the, you know, the owner level, shareholder level, or member level. And what's the difference there? For most part, tax-wise, for income tax-wise, there's not much difference there. Okay, the income flow to a shareholder level. You pick up the income and you file tax return. Then you get K1 from there, and you pick up the income and then you pay tax on those income. And the big difference there is a self-employment tax. The flow-through income from S Corp is not subject to self-employment tax. That can be very hefty. And if you have a multi-billion-dollar company, that's not a big issue. But if you're a small company, that can be a very, very hefty tax burden. Okay? Self-employment tax is actually it's a Social Security and Medicare. Okay? So on top, if you are S Corp, the flow-through income only subject to income tax. If you are LLC, default as a partnership, the flow-through will subject to income tax, but also subject to self-employment tax. We know the self-employment tax, we have two components: Social Security, Medicare. Social Security is 6.2. Medicare is 1.45. Remember, you have to pay it yourself. And if you're an employee, you know that the employer will pay the other half. That adds up to 15.3% of tax. That can be allowed. Definitely, we know the Social Security have a limitation. The income above, I believe, is 106,800. It's not subject to Social Security. So that's what I'm saying. Okay, if you are multi-billion-dollar income, really, that's not a big issue. But for most companies, you only make about $100,000, you know, things like that. That can be a big tax burden for you. Okay, so that's the main tax burden on the LLC. So you want to make sure, you know, for a lot of professional service company, I want them to start with an S Corp. But LLC can be an option too. And another thing about LLC is, if you S Corp, we talked before, okay, you cannot have foreign shareholder in the S Corp. It's not allowed. I mean, you be a C Corp, then you cannot make election because you have foreign shareholder. LLC very flexible. You can have a foreign shareholder, but okay, if you have foreign shareholder here, if the LLC have income, the revenue service require you to withhold 35% of the income allocated to the foreign shareholder and send money to the revenue service. It's a mandatory withholding. Okay? So let's say, okay, I have a partner, which me and my foreign partner, we make $200, and each partner, let's say 50-50. I get $100 myself. I'm a US person, so I'm fine. I mean, I will pick up $100 on my tax return. I will do whatever I will do with that. For the foreign partner, okay, the LLC will withhold 35%, which is $35, and then send out to the revenue service. A lot of foreign investor will never like that. That's why if you have a foreign investor, normally because of that, they will not. They normally will go with a C Corp. It's an option, but because of withholding, mandatory withholding. So a lot of foreign investors will not like that. That's why, I mean, I have a bunch of companies with foreign investors. I think after I talk to them, they always say, yeah, I want to be a C Corp because of the withholding issues. I think we covered most of the most of the part because we can cover the sole partnership, S corp, C corp, and LLC. That's all. Then the partnership you have other form like a limited partnership. They are not very common. General partnership they are not very common at all. So we only have limited time here. So I don't want to go over all of them. Definitely, I will sit in here. If you have any question, any tax issue regarding business, feel free to come to me. Okay, thank you, guys.
Thank you, Roger. Now we have to talk about marketing, legal, and tax. Now we need to have someone talk about how to protect